Arya is senior investment strategist at Stancy. He's joining us now. Rajat, good morning. Good to have you here. Uh, can NVIDIA do it for the US market? It has been. Will it from here on as well? Post the results.
Yeah, well, the Magnificent Six, I wouldn't say Magnificent Seven anymore, but Magnificent Six has clearly been the driver of the US market. And the latest results shows why. And this is the key, driving factor for global markets, if you ask me. Earnings growth and flows, these two are the factors that are driving growth. So to your point about US mega cap, mega tech earnings, I'll just give you a stats which I found was very interesting. So the Magnificent Six, their earnings growth in Q4 was plus 50%, right? I repeat, plus 50% for the Magnificent Six. And the rest of the 494 stocks in S&P 500 were about minus 10%. So see the wide gap emerging between these earnings drivers and the rest of the market. Now, these are the companies which have been driving this growth. And to your point earlier, I think you mentioned earlier, Nigel mentioned earlier about what is driving it. It's the revenues. So revenue growth of these companies are also surging. And this is the key driver. We see the same factors in other markets. In Japan, for instance, earnings growth are picking up. That's significantly because of weaker yen. You have the other growth market, which is the star of the emerging markets, India. Again, growth driving it.
Okay. So what do you do in a market like India now, Rajat? Because there are some interesting trends that are playing out. Private sector banks have started to come back in a big way. IT is sort of taken a back seat, but now with NVIDIA's numbers, you never know, maybe IT may come back as well. Where do you see leadership emerge over the next, say, 12 to 18 months?
Yeah, in India, what is driving is two things. One, earnings growth, and second is flows. So I'll pick up the earnings growth first. You have a government which has been accelerating investments. Whenever that happens, anywhere in the world, you see, and this is investment into infrastructure, into capital goods, right? So that is organic growth. So we are quite bullish on the capital goods sector, the industrial sectors, and the large cap. And that is likely to continue, especially after this strong budget where caps went up again. And second is the domestic flows. Indian investors have been, continuing to invest domestically, and that it's almost a structural phenomenon which we don't see much in the other parts of the world, other parts of the emerging markets. And that is going to continue. They are doing the right thing, by the way. Even though we maintain that, the US, the Indian markets are expensive compared to other emerging markets. If you keep averaging into any of these pullbacks that happen, you will benefit from the long-term growth story, and that's how wealth is created over the long term.
All right, Rajat. Hi, good morning. As you said it right, and we've been saying it for a while. Indian markets are not cheap, but they're giving you good earnings growth. The question now is, in the near term, do you expect China to outperform? Because that one's just bombing out. Economic data still not looking up. They're trying to do some measures to pep up that economy. And valuation-wise, it's rather attractive, but it's cheap for a reason, right? What's your view at current reckoning?
Yeah, China markets, if you notice what happened, let's say since the Lunar New Year, they are outperforming actually, and by significantly so. They're up almost 8-9% versus the rest of the world is barely up. So they are picking up, and you see more and more government stimulus being thrown on the market. They've banned large investors from short selling. They've stopped quantitative fund from short selling. So they're taking increasing steps. This week again we saw 25 basis points cut in the 5-year lending rate, which is typically aimed for mortgages. So the government is getting more and more active, proactive in turning things around. So in the near term, to your question, tactically, there is scope for China to outperform in the emerging market space. Longer term, though, the structural issues that you talked about remain. And for that, we need far more decisive measures. And by that, I mean really things like quantitative easing in that property sectors, or for that matter, even like the US style giving checks to households. You need direct fiscal measures.
Sure.
You need the direct quantitative easing measures.
All right, Rajat, we leave it at that. Thanks a lot for joining in. Since you're talking about the Asian markets, right, the big headline this morning is Japan's Nikkei. It surpassed its all-time high. Despite being in a recession, the markets in Japan are looking extremely good. The all-time high that it hit was way back in 1989. And as of yesterday, the Nikkei market surpassed its all-time high. So that's the other big global headline. Let's slip into a quick break. On the other side, our research team will be joining in to help us with the top stocks to watch out for as we begin a brand new day of trade.